Hello students, welcome to KK Commerce Tutorials. In this video, we have discussed about the characteristics of the non-profit organizations. In previous class, we have discussed what is the non-profit organization, what is the non-profit organizations, and what is the differences between profit and non-profit organizations. Then in this video we have discussed characteristics of non-profit organization. Then non-profit organization, which companies have started with the services to the people or members, that organizations will be called as non-profit organizations. Okay, then we have first characteristic, that is the first one is the motive for service. Already the meaning is the non-profit organization is the service motto. Every company, any company have provided started with the service motto. That organization first characteristic, that will be motive service. The first character is motive service. And second one, management. Who is the manage this type of organizations? The managing committee are executive members and its members elected. The organization will be organized, their members elected, that person managing committee or executive committee, or members elected, who is a CEO or some manager, director, managing manager, executive manager, some these type of managers, that elected member have managed that organization. Then who is the member? The members are elected. Then who is the member? In this organization you have provided to some subscribers, like provide their funds continuously. That person will be subscribers or fund. Who is the fund collected members? Subscribers. He is the subscriber, is a member and elected the some person. That person have managed. And next one, income source. These organization, how will we get the income? In profit organization have get the profit or get the income in the occur in sales, but in this organization have provided to service, and get the income and get the generate the resources of income. So then these organizations have provided or getting the income sources, that is subscriptions, donations, some grants or government grants, legacies, etc. These type of sources have getting the income. Next one, surplus. Surplus means in this profit organization have treated as profits. Have getting the surplus in these organizations, that will be credited to the capital fund. You are getting the surplus in the end of the year. That profit or surplus will be credited to capital fund. They have not distribute their members or management. So that surplus has credited to the capital fund. And next one, accounting information. These companies also maintained accounting system in the double entry accounting principles. They have follow compulsory follow their accounting system. But in previous years, these organizations have not mandatory but have maintained. So In the maintained account, I have compulsory follow the double entry accounting system principles. I have maintained a proper accounts books. That the access, who's the access that accounting information generally have presented are potential contributors and its members access to accounting information which person have inquire their accounting or inquire their funds, how to utilize their funds, what is the expenses of the some tournament or some what is the expenses, what is the income position of this year, have getting the information, the present persons are potential contributors and its members have access the it to accounting information. So that is the characteristics of the non-profit organizations. Okay, next topic is in our class accounting procedure for non-profit organizations. What is the procedure, what is the differences of the ordinary like sole trade partnership and these type of organization, what is the differences in, once imagine in sole trader, at the end of the year he prepared a final accounts. In final account how we have prepared trading account, profit and loss account and balance sheet account. But in this non-profit organizations have prepared receipts and payments account, income and expenditure account and balance sheet account. The organization have maintained these proper accounting books. Then first of all we have entering the accounting procedure, we have some terms in the organization terms have learned about mostly important in that terms have some lines, that is the revenue expenditure, revenue expenditure, which expenditure have expired or their benefit close within the 1 year or accounting period, that expenditure is called revenue expenditure. For example, purchase of raw material, stock or some rent paid, salaries paid, wages paid, some payments. These expenses are closed within the 1 year. Why? Because this is the nominal accounts. Then next, revenue income. Which income, which income have received in regular sale of goods or regular on basis, they have regular income, that is the revenue income. For example, income from sale of goods, income from sale of goods, interest on deposits, interest on investments, dividends, these type of for incomes, dividends every year have getting their organization based profits, that is the 1 year benefit, 1 year income, that's it only, the income is revenue income. Next one, capital expenditure, capital, capital expenditure, which expenses have expired or benefits closed with more than years, at least 3 or above years or 1 year accounting period, which expenditure have give their benefit, or the benefits has closed after some years, that's expenditure called capital expenditure. For example, purchase of assets like land, buildings, furniture. These assets have, once you have purchased, their benefits have more some years. That expenditure is called capital expenditure. And next one, capital income. Which income have permanently? Which income have permanently have uh, behalf of ourself? That income, which income have like legacies. Legacies means our grandfather have earned some revenue. They have adopted that. Some special donations like building fund, sports fund, some occasionally have given their uh, this expenditure have utilized, sorry, this income have utilized or expends that particular donations, like special donation, like life membership, some etc. This type of income is capital income. And other one is deferred revenue expenditure. The differences between expenditure, these type of expenditure, revenue expenditure and capital expenditure. Deferred revenue expenditure, first of all, we have just thought to some advertisements. In our TV advertisements have our advertising. In that some advertisings, our shop has started or organized in cooperation with some celebrity on particular date. What is the on situation of some particular person or celebrity have take some huge amount like 1 crore. One day have get in the entering the shop and ribbon cutting have visit our shop, their shop, on for the one day expense have 1 crore. Just imagine that expenses have huge amount. One day you have lost 1 crore. On time the 1 crore have expenditure has closing their written off or some years ago, some years. So that expenditure has revenue expenditure. The revenue expenditure is huge amount. The amount expenditure amount has written off some more years. That expenditure called revenue expenditure. Okay. Then after next class we have entering to starting the problematic. Thank you. I hope you understand. Thank you.